Hello and welcome everyone to today's presentation on bear market trading strategies and their steep bull rallies, otherwise known as bear market rallies. Kind of what we've been living in, seems to be the last couple of weeks or so. So we're going to go ahead and get started. Hope everybody had a great trading day today. As we get started into this, want to let everybody know that first of all, it is being recorded. This presentation is being recorded, and I'm not going to read the disclaimer to everyone, but just as you should already know, trading is risky, and we are obligated to show this in all of our public presentations. So let's get started. I'm Tom Winterstein. Some of you may know me, some of you may not. I am the ChartPros founder, and I have been trading for over 20 years. I'm also a certified mental performance coach, and I recently completed some advanced studies under renowned high performance trading psychologist Kreda Sheehy Kelly, and has done wonders for my trading as well as the others that were, in my cohort as well. But some of you know, and for those that don't, I use precision oriented price action technical analysis, and I trade just about anything that has a chart. I've got those listed there. I list most of my trade recaps on our ChartPros social media accounts, primarily on Twitter and Facebook. A couple of things to note: I was in MBA school back in 1987. Some of you may not even have been born by then, so I'm kind of showing my age here, and some of you may be older than me. But in any event, in that particular day, I remember that the market went down about 22.5% in a single day. Now, nowadays, that really couldn't happen because all the safeguards that are built in. They would just pause everything for a while and let the selling or buying resume when it opens back up. But yeah, 22.5% haircut in a single day. If that happened today, there'd be panic in the streets. I wasn't trading back then, but I was old enough to kind of know what was going on. And I remember reading the headlines of the Wall Street Journal the next day that over 10,000 people were laid off on Wall Street. So it was certainly life-changing for a lot. I have lived and traded through the dot-com heyday of the 90s, the financial crisis of about a decade ago. And also to know, I've been leading and providing e-learning and online training systems and workforce development since 1998. And really, ChartPros is an extension of that and providing professional services and education as it revolves around trading. So leverage my experience in your trading. And for those of you who may not be familiar with ChartPros, we are a leading provider of market education and related services, and we use precision-focused technical analysis. And for those of you who do know us and know a little bit about me, I promise I'm going to share some things today that you don't know yet about me, or things that have happened because they just happened yesterday. So I haven't shared them anywhere yet, but just some trade recaps I'll be going through as well. But one of the things that kind of inspired me to start ChartPros is this concept you may have heard of, give a man a fish and, he'll eat for a day, teach him how to fish and he'll eat for a lifetime. Well, that concept really, to me, extends into trading. Give a trader a signal and they'll profit for a day, maybe. Teach a trader price action and risk management and they can profit for a lifetime. And so what I'm inspired to do is really pay it forward. I had some great mentors along the way. I wouldn't be where I'm at, without the help that I had. And so that's what I'm trying to be for people going forward. And some of the people that are on this call, and I've worked with a lot, some I've never even met before, but hope to get to know you a little bit better. So that's what kind of drives me. I think we all have one thing in common is, we're very passionate about trading. We all trade for the money, but if your focus is on the money, then that's really not where the priorities need to be. Your priority really and focus needs to be on the process. And some of you know that extensively, I'm sure. But what we're going to talk about today is, bear markets, because, we are there now. We're here pretty much just by definition. The media let us know as soon as we hit the defined bear market threshold, which is 20% off the highs. And market sentiment can go from positive to negative. And just a couple of days ago, people were talking about, oh, we're going to make new all-time highs. And then the headlines changed today after yesterday's FOMC statement. So it is, market sentiment can be a tricky thing, but you have to just kind of look at the charts and kind of ignore all the noise and stuff out there. So, but yeah, we're in a bear market, but so what, who cares? We're traders, and I'm not a bear nor a bull, but I enjoy having movement in the charts, because that provides opportunity for me and for others for sure. One thing that is guaranteed, and one person, you guys will probably, some of you may know where this came from, but all the market does is cycle. It cycles up and it cycles down. That's really the only guarantee. Now, there can be cycles within cycles. There can be different emotions. There can be different sentiments, different, headlines, and it can all sound confusing. Somebody once said, it just looks like, just lines of confusion on my chart. And I have so many different colors, it looks like a Skittles pack, on there. And that's not what it's about. Sometimes less is more, and, just keeping it simple is sometimes the best approach. And so that's what I'm going to do, is I'm going to go through some of the things in keeping it simple today. And, we're just going to highlight 5 price action tools, that I specifically use. Navigating through the screen here and some of the. So a bear market rally, that's the other thing you've probably heard of. The media likes to talk about it. When you have, a week's worth of green candles or 5 straight days, when you're inside of a bear market, that's a bear market rally. And it came to an abrupt halt yesterday, it seemed to be, and it seemed to turn on a dime. But it can be brief periods of optimism, where your market sentiment seems to have changed, but, the technicals tell us otherwise. And it's very normal, in spite of what the media, may try to say or lead us to believe, but, cycles are normal and it's healthy. Everything can't just go straight up or straight down forever. We need the markets to cycle. That's just the way that the efficiencies, work inside of it. And every time period, going back to the Great Depression, during the World War II, the 60s, it just cycles up and cycles down. And even within bear markets, there can be some extremely steep bull rallies inside of those. And as traders, what we like to be able to do is to identify those and take advantage of those from a trading perspective. So, and I talk about, marking up a chart using 5 price action tools. And we really don't care if price is going up, if it's going down or going sideways. We can utilize these 5 tools. There's nothing proprietary about it. They're native to every charting platform, that's out there. And, the question, if you still haven't reached the level of consistency or confidence, would you like to learn those skills? And that's what I'm trying to do, is share that. And I'll give you some, very specific pointers today, along those lines. Obviously within an hour, I can't share, my 20 years of trading experience, but if I can share a couple of nuggets, that's really my goal, for today. So we talk about market sentiment, and bear markets and bear market rallies. And this is a snapshot of the YM chart from about a week ago. If you follow us on Twitter, you saw me post this, and yeah, that's part of my trade plan. And what I did, and it becomes somewhat obvious, a little bit more clear to see when you chart it on a weekly. And when it turned down around 29,000, I was anticipating maybe a little bit lower. There was some lower time frame reasons from a technical standpoint that it did turn, and that's okay. Because like I said, I really don't care which direction that it's moving. I just like for it to move. And if it wants to go sideways, well, I have strategies to capitalize on that as a trader as well. And so, this was from a little more than a week ago. Some of you may have seen me post this. You kind of followed the updates. It kind of kept creeping up a little bit higher and higher. And yeah, I wasn't waiting for it to get all the way up there. I kind of had some targets in mind. And so lower time frame, I kept taking long entries. And as it got a little bit closer, I just kind of waited to see what was going to happen. And it actually exceeded the 50%. And that's okay, because I had some lower time frame technical reasons for it to do. I still wasn't, you know, in a short. I thought about it, but you know, those were some pretty steep candles. And so I just kind of let the market play its hand and show me, you know, what it might do so then I could react to it. And so what happened is we saw that it turned. And, you know, on the weekly, it didn't really give a clean entry, but my goal on higher time frames is to find zones or areas, you know, where it could potentially turn. And then I can drill down to lower time frames and look for precise entries if that's the direction that I want to trade. And as I go further into our presentation, I'll be talking about these specific tools, but I just wanted to start at a high level and talk about some market sentiment, because you have to be able to at least identify what the overall market sentiment is to apply these tools. And so that's, you know, the reason that I'm really going, you know, through this right now. And what happened was I went down to the lower time frame. I took off the weekly trend, took off the weekly fibs, and put in my a weekly impulse, what's called an impulse Fibonacci. And yesterday, no surprise to me, it may have surprised a lot of others, but it went right to, you know, that 33,045, you know, area, and made it a quick about face. And that's where I got short, and I'm still short. And in the next couple of slides, I'll show how I'm using these 5 price action tools to manage this trade, you know, from here on out. And that's a little bit lower time frame down on the daily. Here's where I've got multiple fib sequences, if you will, and I will go through and explain what these are. But again, just trying to show the higher level time frame. You can see, right, I don't know if you can see my cursor, but right at that red level, 33,045 is where I got short, and I'm looking to take some off as it at price. I anticipate that it could come down to some of these other levels. There's no guarantees. I have pulled my stop, you know, into profit at this point. So I have an overall risk-free trade at this point. But, you know, that's not to be confused that, you know, when you enter a trade, it's not risk-free, but you can get to a risk-free status through risk management and trade management, you know, as you progress through the price action tools and the price movement. And so let's talk about what are those 5 tools that I use. Well, they're all on this screen right here. Support and resistance, and those are the horizontal, you know, like the horizontal gray lines. Those are support and resistance that I have in there. Trend, I've got one trend line, that's the red, that's going from left to right, going from up to down. I've left that lower trend line on. Supply and demand, I have one right around 30,250. It's kind of the gray rectangle. It also coincides with one of support and resistance and a Fibonacci, where I've got basically 3 of the 5 tools are kind of lining up in that area. So that is a potential area of interest for me. Change control is that darker shaded rectangle. And when we talk about change control, it really is a change in control between the bears and the bulls. And by definition, a change control zone can have very discrete boundaries where price can respect the top or the bottom. And it did a couple of times in kind of this consolidation where it respected the tops and the bottoms. It can slash all the way through it very quickly. You know, it did several times. You keep in mind, this is a daily chart. So on a day, it just kind of ripped up and ripped back down, you know, through there. And at some point, whoever's in charge, it will move away from there. And at least in the short term, the bulls were in charge, and that's why it moved away. You know, I wouldn't be surprised if it wants to revisit that, but that's what it is. It's an area of consolidation where for a short period of time, nobody's really in charge. And then, of course, Fibonacci's. And Fibonacci's are probably the most widely used technical price action tool out there. They also happen to be the most widely misused tool. I've seen anchors in the wrong places. I've seen anchors upside down. There certainly are right ways to do it, and there are wrong ways to do it. And I'm going to actually go through about a half a dozen of the right ways of where to put your anchors from a Fibonacci. So it boils down, this is it. It's 5 chart tools. And like I said, it's native of every platform. This particular chart was done in Thinkorswim. I've got some other examples that are coming up in NinjaTrader. But it really, you know, some people use TradingView. It just doesn't matter. they all have these types of capabilities. It's the application in your style and your risk management that makes the difference as you move through here. So here's an example of a swing Fibonacci and I've got, big circles that emphasize where the anchors would be. And this is, from a low, on the chart to a high, and we call that a swing Fibonacci. And a swing fib is never wrong to use, okay? Because it's the easiest one to find, because it's the low to the high. And this one I think happens to be it's an older chart, and it was on a weekly basis. But you can have a swing fib on any time frame basis, and these will become your best friends. And by default, I'll put in the 50 and 61.8% retracements. There are others that people use, but I like to start with 2 retracements until they're reached or breached before I will change those. A validated Fibonacci, this is a little bit more of an advanced concept. Now you saw that last one on the swing fib, it kind of looked like it retraced into no man's land. Well, in this case, I was able to use a validated fib anchor, which meant I got a valid retracement off of an initial impulse run, and that's the horizontal blue line. It was a shallow retracement, but it was a valid statistical mathematical retracement nonetheless. And this happens to go back to the pre-COVID run up and the pre-COVID drop. It was an exact 50% drop, almost to the tick. And if you had that swing fib, it looked like it just kind of turned to no man's land. And it as we all know, it went on to not only exceed that, but it went on to meet some of the profit extensions way up and above and beyond there. But this is a concept called validated Fibonacci. And it's a concept basically of Fibonacci sequencing. This is another advanced one. This is called a high-to-high Fibonacci, where my anchor points are at a high point to another high point. And in this case, you can see I got a valid retracement, and I'm looking for a reversal zone when I do these. And there's a couple of things that has to happen. One, if you're going to use a high-to-high, price has to have gone above a significant level. In this case, the significant level was new all-time highs, but it could be a very significant support and resistance, level. And in this case, it did. It went from one all-time high to another all-time high, got a retracement right in the potential reversal zone of 50 to 61.8, and then it just, continued to take off. So once you identify that price, breaks above a significant level, then that's when you can begin to use these. And there's other ways to identify that, but that's the first and most important one, to take a look at. Conversely, you can also have a low to low, where I've got a low point, that's on the left to a low anchor that's on the right. And in this case, although it's not marked, price had gone below a support and resistance level and got a retracement to the 50% level. And again, you're looking for a reversal between the 50 and 61 and before it could potentially drop again. And in this case that it did. So that's an advanced low to low Fibonacci anchor placement. And so then you can begin to put it all together for precision oriented training. And I've put some lower time frame examples that these are actually trade results, from I think in the last week or so, where I use lower time frame, that typically, in the morning around, the market open. In this case, it was along using price action tools, Fibonacci, and trend. And you notice that I've got my fibs in both directions. And so I like to call these statistically calculated profits. I think price went on to go higher than that, but basically I took that chunk. My goal is not to get it all. My goal is to get a defined part of it that's basically in alignment with my trade plan. And this was my trade plan. So I entered at that 78% retracement where it's circled right around that trend line. And then I took it off at the bear retracement fib 78. So that was a nice gain from 38.36 up to 38.60. And then, then you can go on and do other things or look for your next setup. Here's a short example where I was using the price action tools, Fibonacci, trend, and support and resistance. And here I've got, an anchor. It doesn't look like a swing fib. This is more of an impulse fib. Now you notice for my anchor on the top left going down to the bottom right, it started to retrace and then it started to fall again. Well, it didn't reach my minus 23.6, which is a profit target, before it went back up. So I left my anchor there. And then I happened to identify this trend, and I had a support and resistance level that was there. And so I took a short. You can see I got in at 38.72, and I actually let that run a little bit further. I took half off at 38.54 and took the rest off at 38.35. So that was a nice trade. And so for me, I like numbers, I like statistics, and so I get to apply the Fibonacci's and basically, like I said, it's statistically oriented profit taking and entry, and so that's the way that I use it, in my trading. And so those are the ones I talked about, essentially using basic and advanced Fibonacci's. There's a swing versus impulse. There's validated fibs that we talked about. You have the overlapping fibs, meaning I had bear retracements and bull retracements. So essentially what I do is I create bi-directional levels of interest. There's a concept of fib sequence validation, just part of it like a validated fib. And it helps me to identify confluence areas. So if I get multiple fibs where they overlap at different time frames, and they're overlapping like that one trade where there was trend and support and resistance, then that just gives me more confidence in entering that trade. Now, nobody ever knows for sure if the trade's going to work out, but I've got calculated stop loss. Stop loss is built into my trade metrics. And so I know how much it'll cost me, the cost of doing business, to see if my levels are going to work or not. And I'm totally willing to accept that. And if you're at a point where that's too big or it's too much, then my advice would be to scale down or to stay out. And lots of times what I'll do is I'll build on intraday, I'll run tighter stops than if I'm running a swing trade, but it's almost always based on structure and some other techniques that I'm going to share before we finish today. But I don't use any indicators. I don't have any signals. Occasionally I'll look at a momentum study, but I found that using less on your chart can actually be more beneficial, from that standpoint. But wouldn't it be nice if you had a way to anticipate market moves? And so that's one of the things that I'm going to talk about is a tool that we use to be able to anticipate, market moves like that. And that's with the VIX. And for some traders, the VIX is a very common and widely known concept. But what I have found is for many traders, it is not. And it's not complex. It's actually kind of simple. The VIX is basically a measurement of fear in the markets, and it is actually a chart that I'm going to show. And this is a very high time frame. It's a weekly chart. It shows like the last decade and a half almost on a weekly basis. And one thing about the VIX is it moves inversely to the market, if you will. So we saw during the 2008 financial crisis, we had a pretty steep, spike in the VIX. And you can imagine what happened to the markets back then is, they tanked. And so over the next decade, the VIX went down. Anytime the VIX is below 20, it seems like the market can do whatever the heck it wants. But then when the pandemic hit in 2020, we had a huge spike in the VIX. And, we all know what happened to the market. And I'll show you because it's on my next slide here as well, too. You see over the last decade during the financial crisis in the box, we had some drop. And then for a decade, mine and anyone else that had, 401k or, just from an investment standpoint, people that had money in the market long term, everything just seemed to keep going up until it didn't, and we had that spike in the VIX when the pandemic hit and we saw how the market dropped. But then when the VIX dropped, the market kind of kept going up. And so this chart's a little bit older, but the irony is, we've revisited some of the price levels, since then. But this is a high, meant to be a high time frame chart to kind of give a high level orientation, especially if you've never been exposed to this concept before, of how the VIX and the markets move inversely to each other. But it works across all time frames, and essentially the indices are the one that correlate the most to it, and since the indices are made up of individual stocks, then, because lots of times I get a question, hey, does Amazon and the other stocks move with the VIX? And the answer is not necessarily, but they make up, since they make up the indices, that indice could be directly impacted by that stock. So, and I trade less of individual tickers than I do, the indices or commodities or crypto or stuff like that. But I will take a look at it as just another one of my tools, even though it's not a price action tool per se on a chart. It is a chart for me to particularly to apply these tools to. So the VIX, is something that I look at every day. In fact, I've got an example of how I used it last week on an hourly trade. I used the VIX as a trade timing tool here, where I had, side by side, I had the VIX on the hourly chart and I had the NASDAQ on an hourly chart. And when the NASDAQ was getting ready to make a potential reversal between the 50 and the 61.8, the VIX on the top part was at a place where I had a bear retracement fib, I had supply and demand zone, and I also had Fibonacci. So there's no a trend. There's no guarantee that it was going to turn, but in this case, it worked out for me, and I got long NASDAQ. And this is on an hourly chart, and you can see it went from around 11,230-ish up over 11,400, with targets up above. And so that was a very nice intraday trade at that point. And that recap is actually on our social media, as well. And so one of the things that I wanted to do, and when we get towards the end, I'm going to open it up for Q&A and questions, and I'll take some requests for charts. If anybody has any, I can start with a blank chart, or I can go through any of these. And I've gotten to the point where, I can start with a blank chart of any item, any ticker, any symbol. And usually within about 5 minutes or 3 to 5 minutes, I can come up with bi-directional levels of interest, intraday or longer term, and come up with, at least a sentiment of what I think, price could do. And at the end of the day, as traders, it doesn't matter what we think, it matters how we react and anticipate, and one thing that you should, I would suggest you never do, is assume that things going to happen in the market or expect certain things to happen. And one thing that I've learned in my, over 20 years of trading is I've learned to never say never. Because I hear people say, well, the market just can't keep going up, can it? Well, it can if it wants to. Like, well, if the market just can't keep going down, can it? Well, it can do whatever it wants. There's an old saying is that, the market can stay irrational longer than traders can stay solvent, so to speak. And so you may have heard that. I think I see some questions coming in too. Let's see. Someone said, do I have any trainings around the VIX? I'm glad that you asked that, because that actually is our next slide. We call it our trade entry timing course. And right now we have a special on that. And there's things you can do. You can discover how to use the market's built-in fear gauge to measure how risk, fear, or stress before placing trades. And you can see on that last screen how I used it as an extra thing. It really gave me the confidence. If the VIX wasn't at a point where it looked like, I could anticipate it making a turn, then I stay out of the trades, regardless of what the feature one says. But we've got a new volatility masterclass that Michael Perigo and myself have done. And we added this up combined. We've got over 32 years of trading experience between the two of us. And really, there's some little known secrets that Mike shares in the course about the VIX. And you can start taking advantage of it, today, if you want, even if you never traded in a bear market, And normally this course sells for $129, but for the remainder of this week, we're offering it for the price of $29. And we've gotten, just a tremendous amount of feedback on that. Had a new trader I just met 2 weeks ago. I did a one-on-one session with him. He bought the VIX course, and the next day he sent me back a message and said how he made 30 points in ES just by using that. So Vince asked, do you only watch VX versus the VIX or VXN? To some degree, it doesn't matter, but me personally, I always look at /VX. That's the one that I chart, and that's the one that I watch. So people, some frequently asked questions, during higher periods of volatility, markets can gap up or down on the opens. So you have to be very cognizant of overnight gap risk. It hasn't happened since the pandemic, but, it's called limit up, halts during trading hours, or limit down, meaning that if the market reaches a certain threshold, I think it's 7% in a single day, then trading just stops, I think for an hour initially, or maybe longer sometimes, depending on when it happens. It could be till the next day. So basically, the moral of that story is, stay true to your risk management rules, and, when in doubt, stay out. And I do that myself. Sometimes I just don't feel good about it. It doesn't really matter. And, for me, I treat each week as a zero-sum game. I start each week with the same amount in my account. I take a highly scrutinized, first trade of the week. So, and I try to start with positive equity, so that, I can leverage that positive equity for the rest of the week. Not all of my first trades of the week are winners. Sometimes I do start with a loss. And so my goal is to get back to zero as quickly as possible. But there's a variety of different risk management techniques that myself and other traders can implement, like, bracket orders, and getting, that helps getting you to that risk-free status. Sometimes I'll be in a swing trade. I like to swing trade the Forex. It seems like they're either in a period of consolidation or ripping up or down. And so the goal is to be in it before the rips start and not chase them. And sometimes, and I size down for this, and I'll hold them for longer periods, but sometimes I forget that I'm in a swing trade, on a Forex chart, just because it's out there doing its thing, and I'm trading it on a weekly or daily type basis. I think we have some other questions coming. I can also open up the audio. Does the course cover risk management rules you can apply to your trading? It does from a charting standpoint. That course doesn't, there's nothing about, money management or risk management. We do have some other things in our other courses that talk about proper risk management. And, and one thing about ChartPros, and one thing about me in particular, and I know Mike is like this, we never tell people, when to push the button. We're never going to tell you when to buy, when to sell, when to take your profits, how much profit to take, because everybody's got an individual trading style. What we will do is we'll give you those tools so that you can make those decisions, on your own. And what I've done is I've created my own style. A lot of it's been adapted from some of my mentors and some of the things that they do. And Mike Perigo was, initially he was, my instructor and then my mentor, and now he's one of my partners. And so it's been, come full circle for me. And so that's one of the reasons, like I said, that inspired me to start ChartPros, is to pay it forward and help other aspiring traders, out there. And for those of you who do know me, that I don't do ChartPros for the money. I'm certainly not going to do it for free, but my goal, in its most purest form, is to help other traders, figure it out, if you will, because there was people that helped me figure it out along the way, and to, have the success that I've been able to have success with. And so, basically, especially if you're just starting out, what I like to share with people, or if you're, haven't quite hit that level you want to, if you want better results, trade with money that you don't need and see what can happen. So many times traders will come to me and they're trying to, their trade to make their rent payment or their mortgage payment, or they got their kids' college tuition. And I'll tell you, that's just a very, very hard place to be. You've probably heard the saying that, scared money never wins. And that I've seen that, that I've seen that truer more times than I care to admit. And so anyways, yeah, you want better results, scale down, trade with discretionary money, and make sure that, just like there's a food pyramid, you may be familiar. Well, there's also a risk management pyramid, whether you're an investor or a trader, or you may be both, like myself. So let's see, we're doing good on time. I can open it up for chart requests. I do have Thinkorswim loaded up if we'd like to see any charts, if there's any questions. I can also turn on the audio. If you raise your hand, I can unmute you, and you can ask questions. or whatever, you can just use the chat. I know I've got Nate as one of the or other people that's a moderator in the room. He's helping me watch, the Q&A question as well, and he can help unmute if needed as well. I'm going to stop share for just a couple of minutes because I'm going to copy some links and put them into the chat for everybody. So I just put a link into the trade timing course around the VIX. All right, so someone has sent in a chat. Can I go into how I'm managing the YM trade? So I'll reshare my screen again, and I'm going to pull that up. All right, so you should be able to see my screen again. This is it down on a 4-hour time frame. And I'll go back up. You can see I've still got the weekly trend line that was on there. There was a couple of other things on the lower time frame that also gave me a little bit more confidence in this trade yesterday. I didn't have it. I think it was right here. This was this one was in the vicinity. So everything kind of lined up around here. This little wick above was within my tolerance for risk management. And so I was able to stay in the trade. And then, yesterday during the FOMC press conference, price just absolutely, fell pretty rapidly. And so what I've got is some fibs in the opposite direction. I did start to scale out a little bit because when I do this, first of all, I've got support and resistance that's on here, and I turn on some of the more shallow retracements from a trade management standpoint, where I'll either offload some or I'll move my stop. Like, so when price hit the 23.6 on this particular impulse run, I move my stop, well into profit by then. So from a trade management, and again, this isn't, we're not going to tell people how to do it, but this is how I do it. This is that weekly. I'm going to turn that off. Right now, my stop is up above here, right above this particular candle, for the remaining portions that are still there. I think there could be some more downside, but who knows? So my stop is right up around here. It's got a lot of soldiers to get through. That one's already come through. And one thing tomorrow is what's called the NFP report, non-farm payroll, which usually introduces volatility into the market as well. And there's no telling, could the bulls reemerge, or could it just turbocharge the bears? Who knows? I don't know. I don't try to guess. I just try to manage this. So my stop is up here right now. I've already taken some off. I'd like to be able to see if price can come down here to this support and resistance, and then the 50, and I'll just keep dragging my stop down as price keeps coming down like this. And I'm going to change this to red. I call it like my trade battle plans. And so on my battle plan, I will take this because I know that's where my stop is. And as price keeps coming down, I just keep pulling my stop down. Like if it were to hit that 50 tomorrow, I'll pull it down here. This gets readjusted. I pull this down. Let's say it does come down to there. Then I'm going to probably move it to here above that 50. And I just keep playing this game and keep away with price until I keep moving it down, and then here, and at some point it bounces and I get taken out. And that's usually, or I can say ultimately going into this, from a really high time frame, my weekly, I've got some levels of interest that are down below here, down around. Now, I'm not naive enough to think that's going to be a straight drop, but if I could get it price way down here, that'd be nice. But I am an intraday trader. I don't like to hold over weekends, and I don't like to hold full positions, for overnight gap risk reasons. So how much money do you need to start trading, or to start trading to start seeing results? You know, with platforms like Nadex, minimum requirement's $100. To trade futures, it's a little bit more, but Nadex it's a good platform. It's actually where I started. I know a lot of the traders on this call started with Nadex as well too. But with the micro futures now, they're very competitive. It's low cost to entry to trade. You can start trading with, $500, $1,000. So small accounts, can be very successful. And if you look at our social media feed, I'll actually trade a small account to show small trade or small account, results, where I've risked $100 or $200, and I can make, 50, 60, $120, in a day sometimes, or in a week. And I do that just because, everybody has different, capital size, different bank accounts and stuff. So we all have different trading styles, different risk management, different capital assets and things like that. So I've got a little bit more time if there's any other questions. Any other charts we want to see? I use the 5 price action tools. Anybody have a chart they want to see? In equity, it could be anything. Nice to look at. Yes. Thinkorswim. I use Thinkorswim for my charting. I also use NinjaTrader. I like to chart with Thinkorswim. I have an account through NinjaTrader as well, but I don't chart as much there. So let's pull up. Let me stop sharing for 1 second. I'd missed some of these questions because my chat screen rolled off the chat and I didn't see them. So let me pull up an ES chart. All right, so I've got ES. I'm going to reshare my screen here. I think we've got that. All right, so what I'm on a weekly basis, and what I like to do is I start with a higher time frame. When I start with a blank chart, I'll go to monthly and I'll draw off some support and resistance. And I like to work from left to right so I can whittle it down, things that will become obvious to your eye, basically where there's a sharp turn, where things were, maybe it was an all-time high, that was an all-time high, that was the pandemic, that was an all-time high, and this is on a monthly. And so sometimes things will jump out at you more clearly on a monthly. And when I create my trade battle plans, I'll do them in different colors. So I know, okay, yellow or gold is my monthly, blue are my weekly, and so on and so forth. And so as I'm going through here, then I'll pop on down to a weekly to see if there's anything else that stands out. Like this level right there, that was an all-time high. We've been kind of flirting with that. You can see recently there's some coming down. Can't forget the underneaths. And here's an example. We see where this support and resistance are kind of close. And this to me pops out to me that at least on a weekly, that's a change control zone. where, and I'll put it in this darker, where price was respected to the tick, you know, on both sides, if you will. It's kind of slashed through it, and, you know, control between, it's been more of a battle since April than it was before, because back here everything was new all-time highs. We see we got a back test of a level there. We got tested to the tick, and then here we just kind of got a lot of slashing through there. And so that's down to a weekly basis. And then I'll put in just, you know, some basic structure things like my trend. And so you can see we're more than 20% off the high. We're certainly in a down channel. There's a variety of different ways you can do your fibs. The first one I always like to do is the swing fib. In this case, you know, this trend line wasn't there when it turned there, but it turned out of support and resistance. It didn't quite reach all the way to that 60. Well, at least not on a weekly, it didn't. Okay. And so it didn't seem like a clean turn, so to speak, but I would venture to guess it was probably a clean turn off of a validated fib. And what I mean by that is, let's go back up and see, we got a retracement here. It filled in our reversal zone. So I can now use this as an anchor, as a new anchor. And let's just see what that did. Still not a clean fill, you know, right there. So, you know, I wouldn't have traded that, but we can use this as an impulse. And see, we got a retracement to the 50. Wasn't exactly clean. So we'll see if we can get it validated. I haven't done this, so I don't know. You see me do it for the first time. Yeah, so you had kind of some overlapping, you know, that trend, we'll put it back in. Then we can go down to the lower time frame and kind of look. So I've got some levels of interest basically in both directions, at least from a higher time frame. I don't have any of my big retracement fibs here, but let's just say we're going to put in a swing fib. You know, and it was a little bit short of this 34.91. It turned a few ticks before that. And one thing I've noticed is you know, SPY and SPX actually turned a lot more technically correct than ES did. SPY turned directly on its 50% retracement. This front ran it a little bit, but that's okay. You know, there's other ways to still get involved. It would be nice. I think did I take that off? You know, technically speaking, you know, we can get down in this level. This is and I'll put this in purple so we can see it. That was when the pandemic hit and we just kind of dropped. That's a pretty big line in the sand, you know, if you will. So we can get down here around, you know, big round number 3,400. You know, it's not going to surprise me if we get down to 3,180, because these are some levels of interest. We got some profit targets down here. We didn't even talk about an ABCD, but I have an ABCD completion down here around this trend line at 32.41. But I also have some completions up here. Now, if I put this swing fib back in, I can leave this here and I have some targets to the upside. And again, we're on a weekly right now. I haven't even whittled down to what's my plan going to be for NFP tomorrow. You know, I like this swing fib because if it were to retrace, you know, it's got good clean fill right here on the 50. It's got a good clean fill right here on the 61 and support and resistance. If it breaks up here, people are going to be, you know, euphoric, you know, in the media, and that'd be a good thing, you know, as well. But on our bear market, we're certainly in a down channel. I think it still does have some room, you know, to go down, if you will. So let's go down to a daily. You know, for levels more in the immediate future, let's see if there's any support and resistance that I didn't have at a higher time frame. And again, normally I would do these in different colors. That's a level. That's a level. It's kind of flirting with that level right now on a retest. Where is that 50? Did we already get it? Yeah, so it just tested the 50 on this retracement. So essentially, you saw in a very short period of time that, I've got levels of interest in both directions. Now on a daily, okay, I can still whittle it down further, but this area down here, 33.97, is not technically out of the question, nor is 41.55. I don't care which way it goes, to be honest with you. So as we go down even further, let's go to a 4-hour. If your sentiment is still bearish, we can put in some more fibs like this. This was a nice retracement off of there. So we can actually put this in. We can use some more of our price action tools right here. That's not out of the question. I don't really see, this was here, but it's no longer valid for us. Right here, some crosshairs. That would be interesting on a retest if it comes back up to 38.63-ish, that area. And on my battle plans, I'll actually change the colors on this, so I don't get confused. I know that's a bearish retracement. The green is a bullish retracement. If someone's, intraday, I wouldn't do this because, one, it's overnight, and two, we got NFP tomorrow. But if you're a scalper and you're trying to get 1 or 2 points, you can, take it. This stuff works on any time frame. You see we got a retracement on the hourly right down to the 61. There is support and resistance there from higher time frame. It'll look like a wick on higher time frame, but that's there. So, the bull enthusiasts can say, hey, I'm getting long at 37.25. And technically, they can justify that. But again, everybody has their own styles. You could actually put a fib here to the short side. We got kind of turn to no man's land right there. I would turn that off. And now, so now we're down at an hourly. But given the way volatility has been, if you're going to trade within an hour and you're trading binaries, this would be the approach to do it. But with a big news event and potential catalyst tomorrow morning, when the NFP report comes out, you can get, some more big candles just like this in either direction. So that's why I always start at the higher time frame. And like I said, I'll typically have these as different colors. So kind of my levels of interest, are there. I've got this zones for support and resistance. That's there. And I've got these fibs, if market wants to keep tanking tomorrow, that's a potential long. I've got good support coming off of there. Market wants to retrace. 38.63 might be an area to try. But, again, there's no guarantees, but those are my levels of interest in both directions. Does ChartPros offer trade battle plans? Yeah, we don't call them that, but yeah, we actually have a chart subscription where myself and Mike, we post 15 charts per day. I recognize some of the names in here are our chart subscribers as well. Someone was saying they had some trouble with the chat, but if any of our current members have anything to say, you're more than welcome to do that. But yeah, we have a 7-day free trial where you can get our Thinkorswim charts. We post 15 different charts between the indices, the commodities, and Forex. Vince, how'd I do? You got levels close to that? Yeah, but like me too. Yeah, tomorrow's Friday. I'm sitting out tomorrow as well. I mean, it's good to be able to do that and have that discipline. My trade week ends on Fridays. I know that Mike's trade week ends on Wednesdays. So he's looking to take his highly scrutinized trades of the week on Thursdays and Fridays, which is a little different. I have other commitments sometimes on Friday, and quite frankly, I like to be done trading Friday afternoon. I don't want to be around in front of my screen. I tell people, it's like, a lot of people have worked out at some point, in their lives, and they don't go to the gym from 9:30 a.m. Eastern to 4 p.m. Eastern. They go to the gym, get their work done, and leave. Well, trading can be the same. Have your trade plan, you see, you can get to a point where you can have, you know, bi-directional levels of interest in a relatively short amount of time, set some alerts on your chart. If they go off and you still want to get in the trade, you can. And so, you know, one of the things I learned from Mike when I was a student, he made his statement that if trading isn't boring to you, you're probably not doing it right. And at that point in time, trading was anything but boring. It was stressful. You know, I was stressed out more because I didn't really know what I was doing. But you know, that stress has kind of gone away. And quite honestly, sometimes I do get bored. Like I mentioned in some of those swing trades, I forget I even have them on, and just let, you know, I will never automatically keep a resting order and get into a trade, but I will have resting, you know, take profit orders out there. Yeah, you're welcome, Vince. Yeah, it's been a good week for me as well. I've already withdrawn for the week, and I'll be looking forward to starting over fresh on Monday with a score 0-0. So we've got just a few more minutes. I didn't want to go longer than an hour. You know, I've really enjoyed, you know, doing this. I like talking trading. I'm very passionate about it. You know, the questions were good. You know, we had some emails come in. People said that they weren't going to be able to make it. Would there be a recording? The answer is yes. So I think I mentioned early on that this was, you know, being recorded. So we'll get that posted, you know, as soon as we can. I don't see any other questions in chat. So, but I can stay around till 5:30 if anybody wants to. Again, I don't see anything else here. Good. All right. Well, I want to thank you all for, you know, being here. Appreciate it. Any questions, you can drop us a line on our social media, or got a contact form on our website. You know, take a look at the trade entry timing tool and all the other offerings that we have. So thank you again, and I appreciate everybody being here. Goodbye.